It was a good year for Lowland. The NAV total return rose 20.8% compared to the benchmark, which is the FTSE All-Share, which rose 16.2%, and our peer group, which is the AIC UK Equity Income Sector, which rose 13.3%. What drove both the trust and the market's performance was very much the larger companies in the FTSE 100. And for the trust specifically, what drove the outperformance within those larger companies was the financial sector, where we saw meaningful share price gains from the likes of the banks. This was combined with strong corporate activity for the trust. So what we mean here is that we saw a number of bid approaches for companies including pawnbroker H&T and industrial chain maker Reynolds. If we drill down into the top performers by stocks, 4 of the top 10 absolute contributors to performance were banks. Here, the return to a more normal interest rate environment allowed them to generate a good rate of return while loan losses remained low. Outside of the banking sector, the likes of Babcock, which is one of the big suppliers to the UK Ministry of Defence, performed well in an environment where defence spending is seen to be going upwards, and Babcock also had some self-help and is improving its operations. The weaker performers tended to be in cyclical areas that were exposed to tougher end markets. So as an example, the likes of STV, the Scottish version of ITV, it's a free-to-air broadcaster, saw a deterioration in its advertising backdrop as a number of brands pulled back from advertising spending. Another of the detractor was Marshalls. This is a building materials company that makes the likes of paving stones, and that struggled as consumers in some cases deferred spend in those more discretionary areas. In terms of portfolio changes during the year, we added new holdings across small, medium and large UK companies. New positions included Vesuvius, which is a producer of consumables for the European and global steel industry, and Segro, which is an industrial property company. In both cases, we think they combine attractive valuations and strong long-term growth prospects. On the sales side, we took profits from some companies including food retailer Tesco, following strong performance. And in some cases, we also rotated holdings following corporate activity. So for example, Equin Group, which is a producer of door and window frames, we sold that holding after the takeover offer was agreed. It's been a good year for both the trust and for UK equities as a whole, but the market has been led upwards by a narrow set of large UK companies generally within the FTSE 100 index. With the UK budget now behind us, we think it could be the case that that good performance extends down the market to smaller and more domestic businesses where share price performance had lagged up till this point. Lowland would be well exposed to the smaller companies area, which contains many well-managed, market-leading businesses on what we continue to see as attractive valuations.